Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 10th of July. The European markets have started with a slight bit of disappointment, and that's come after a fairly mixed Asian session that we saw overnight. The Chinese trade data was pretty disappointing, with both imports and exports numbers missing expectations. Australian unemployment was slightly higher as well, but that was more due to the fact that the participation rate had increased. But the Asian markets were not really able to follow on from a positive close on Wall Street, where both the S&P and the Dow closed around at 0.5% higher after a pretty dovish set of Fed meeting minutes. Actually, the Fed confirmed that it will be, all things remaining equal, will be ending QE in October rather than December. And also, there was no real talk about the tightening timeline of when they're going to start raising interest rates. So that was deemed to be a fairly dovish set of minutes. The dollar certainly lost a bit of ground on the back of that, but it seems as though the positive moves on equities in the US has not really followed through into UK or European markets yet today. And it seems to be just a slightly negative feel to things at the moment. In terms of economic data out today, we're looking out for the jobless weekly jobless numbers for the states at 130, 315,000, so bang in line with last week is the expectation. But also just before then, we've got the Bank of England meeting and giving its monetary policy update at 12 o'clock. There's no move expected by the Bank of England, and certainly in light of that recent deterioration in the manufacturing production in the UK, and the just alluding to the fact that spare capacity remains in the system. There's going to be unlikely to be any movement there. Also, it could be more interesting to read the minutes in a couple of weeks' time, whereby we're going to get the views of Kristen Forbes, who is it's her first meeting for the MPC, so we'll find out how hawkish or dovish she is, and that will be interesting for the Bank of England watchers there. So it'll be more interesting, I think, in the minutes rather than the actual announcement today. Anyway, so how's that all going to play through? Well, as I said, dollar was weaker yesterday. It's sort of found a bit of support overnight, and the dollar index has just started to tick up a little bit more in the early trading today, and that's come as the euro and the sterling in the last few minutes actually have started to drift to fall away again. So I'll show you those in the later charts. In terms of my chart of the day, it is actually sterling yen today. I've picked a new currency pair that I haven't really talked about previously, but I think it's very interesting actually, because sterling yen has been hitting its head against this resistance 173.60 on numerous occasions throughout the year. Broke through it quite strongly at the beginning of July, and now has corrected nicely back towards that support. So I would say that this isn't looking like a bit of a buying opportunity on sterling yen. You've also got the support of this 6-week uptrend in place as well, and also if I zoom in slightly more here, you see this 21-day moving average, which had been a bit of resistance, became and has now become the basis of support for the last 3 or certainly 2 corrections, and you'd be looking at this being the 3rd correction that it's going to be used as the base of support as well. So this could be a nice buying opportunity, I think, on sterling yen, back at that 173.60 area, currently around 173.80, 173.90. Looking on the intraday chart, you'll see this support that comes in around that 173.70 has been the low that we've seen in the last few days, but 73.60 is there or thereabouts the support, and obviously there was a minor breakthrough, but that quickly retraced. But since then we've had this sharp break to the upside that is now just consolidated back to the support, and I think it could be a bit of a chance to buy. In terms of the momentum indicators, fairly positive on the daily chart, although just with today's decline actually we've seen a bit of a pullback and a possible crossover on the MACD lines, but certainly I think you'd be saying that you're still fairly positive. The RSI continuously comes back towards that 50 mark and pulling higher, so I would be saying that back towards 50 on this RSI would be a chance to buy, and it looks like once again that could be the case. Anyway, so in terms of breakdowns, you'd be looking at certainly that 72.30 mark, which was the key low towards the end of June, would be a key support that you don't really want to have broken down. But also there's a support that comes in around 73.20 also, which seems to be a bit of an old resistance and support here. Yeah, 73.20 I'd be looking at as well, so a couple of levels there to be looking out for. Anyway, in terms of upside projections, well, certainly you'd be looking for a retest of the highs that come in around 75.35, but subsequently, if I show you back on the daily chart, the sterling yen is at multi-year highs. Actually, it hit a high dating back to October 2008, so there is certainly upside potential in this chart, and I think that this, as I said, looks to be a nice chance to buy. Anyway, thank you very much. I wish you good luck in your trading today, and I will speak to you later.